Okay, good morning, everyone. So I'm a little late. I'm chuckling to myself. Uh, the more I try to streamline my process, the longer it seems to take. Not sure what that says. I got too many lines. I got to say, streamlining my process and creating my string. I created too many lines instead of less. Okay. Anyway, good morning, and we got the PPI. This is so messy. I can't see a damn thing. Horrible. Okay. So we got the PPI, and I guess they don't like it. I mean, we don't see a big 20-point bar, but we do see something. All right. I'm not sure. I'm not a macro bro, so if anybody there, maybe Chewy or somebody out
Oh,
of
I pretend to be a macro bro. It's different.
you can play a macro bro on TV here.
Yeah,
So
exactly.
so what does the PPI say? Nothing burger as expected. Do they like it? Do they not
Below
like it?
forecast by a point. So not too crazy. I think it'll be just enough to give us that retracement that we were expecting yesterday, or that I was expecting yesterday. It was like you said, it was based on timing, and we got there too late, in my opinion. So I think
Uh-huh.
we could get it today.
Okay, and it looks like the market seems to want to go. So it's just bad enough not to be good enough, and now they can play the how many rate cuts game, and they can go from 20%, and they went back to 80%. Now they're going to go back to 40%, and they can play that game.
Mhm.
So the robots are in control. Okay, and so the reason I have all these lines here, and I guess shouldn't really have put them all into this TV string. What we have going on where we are right now, we'll talk about a little bit more, is we have all kinds of crap. We have the 6700 that we're going to look at. It's a big gamma strike, and there's like a 6700 '05 double strike, and you have the 50 DMA daily moving average trigger right there. So this whole 6700 6710 area is sticky, trappy, numbers, round number at 6,700, the 50. This is all in everybody's target. There's no secret that this is going on here, or it shouldn't be a secret. Um, if you can get out of the area, out of the orbit of 6,700, and it looks like it's hard right now. It looks like we're just kind of chopping. And really, you'd have to go to 67.95. And then you can, we have the overnight low down here at 66.85, and then, the job zone and the expected move comes in down here. And we're going to look at it more granularly in a minute. Just, I guess, kind of happened to be here, on the chart right here, right now. And so I wanted to, I didn't put out my note yet. That's why I don't see it. Okay, so let me just pull up my little summary of my note. And I think there's a way that I can show this on like media assets or something. Maybe I'll figure that out over the Thanksgiving weekend with the 16 other things I got to figure out. Okay, so anyway, let's quick recap of yesterday. And as everyone knows, we were up yesterday about 1.5%. Just to remember where we came from, you know, it wasn't that long ago that we were down in the toilet below 6,500. Let me make it a 15-minute, or that'll help the way it looks a little bit. We were down the toilet, and then we Monday we opened wherever we opened, like near 66.50. We kind of pulled back, and then we were off to the races. The Qs were up more than 2%, et cetera, et cetera. I think everybody knows. Interesting to me, Bitcoin dropped and turned around. iBit is what I trade. I don't mess around with Bitcoin. I'm too old for that, just for the heart attack uh, aspect of it. Um, but iBit undercut and reclaimed 50. Now there's a lot going on in the Bitcoin space, and I'm not a big Bitcoin guru. However, we have CTA, trend following funds, that you hear me talk about ad nauseum, and they follow trends not just in the um, S&P 500. CTA stands for Commodity Trading Advisors, and it's gold, it's treasuries, it's basically all asset classes, and however they specialize or allocate. We also have Bitcoin, and Bitcoin is highly levered. So as it goes down, breaks the magic lines, the the CTAs just sell mechanically, and then there's institutions that hold it or individuals, and it's over leveraged, so they have to start selling. Those that have both Bitcoin and, let's say, S&P 500, just to speak simply, will then have to dump S&P 500 to have the capital for that. So it just contributes to the general mess we had. So it's nice to see it trying to stabilize. That's why I'm even bothering to talk about it in Bitcoin. VIX yesterday, I trade IBIT too, just for fun. VIX yesterday kind of, was pretty much a straight drop as we went up. Again, nothing shocking there. This is pretty dramatic. VVIX went from 130ish, wherever it was on Friday, and it closed over here, just straight down, just dropped. So that whole rush for tail hedging, it looks like inflation cooled down from PPI. Okay, good. I'll trust ChatGPT more than I trust myself, especially to interpret those numbers. And just looking at how we're hanging here, we don't have like a 10, 15 point bar with the algos going nuts. I'll take it. I'll take it. Now, not to get too in the weeds, but we'll get a little in the weeds just for fun if I could find it. Okay, here. This is the VIX Decomposition Index. CBOE, you can find it, and it breaks down. There was a webinar a couple months ago about this, and there's like a white paper on it. It breaks down the VIX into 20 components or whatever it is, decomposes it. And here's the main features. Sticky strike, which is kind of like the center or the volley, parallel shift, put skew, call skew, etc. Without getting too wonky and in the weeds about this, in my little note, I have a brief explanation of it. Basically, what the brief explanation is that the bid for skew went down, out of the money stuff. They didn't want that shit anymore. At the money went down, kind of commensurate with the whole shift and the move. So there's no there. Call skew, incidentally, didn't go up, indicating that we didn't have a FOMO call chase yet. And so that's basically what the decomposition index told us. I'll be mentioning it from time and again. Like I said, I'm trying to simplify my process by adding more things to my reports. So something's got to give somewhere. Either that or the goats don't eat. And so that's kind of where we are. I don't see where Vol Trader's on a plane, so he won't be here this morning. Let's take a quick look here at options depth. Let me get rid of the markers. The markers show like what's, over the last whatever time period, what's been bought or sold and added to it. That's nice when you're into great trading or whatever it is. But for right now, we just want to pray at the church of what's happening now. What's happening now is this. Okay, so you saw the 6,700 on the chart, biggest bars. Now, these aren't huge numbers. I've been saying that for days. 500 contracts, whatever, 1,000 starts to matter.
What's that one?
15.
6710.05.
So, okay, so here's 6,700, 6,705,
I
the
see.
double.
Okay.
Okay. And so that's going to be sticky. And
Yeah.
for those of you that aren't familiar, let me do my daily 2-minute gamma explainer. Um, to the right is market makers long gamma or positive gamma. To the left is short gamma. So let's talk about positive gamma. And people say, are we in positive gamma or negative gamma? We're not in anything. We're in the S&P 500, and there's strikes locally nearby in short time frames that market makers have to hedge. If they're long, if the market makers are long, customers sold them, they have to hedge them one way. If market makers are short those, customers bought them, like customers bought calls, they have to hedge it a different way. That's all it is. Don't get overly, whatever. And so what do we have here? So we're just going to look at the positive gamma strike right here in isolation for a minute and pretend there's nothing else there. So this is market makers are long this strike. So this is market makers hedge against the direction of the move, like we always heard. That part is accurate enough for government work. It's pretty accurate. So what does that mean? It means let's just start off, if we're above it. If we're above it and we go down, they have to buy against the direction of the move. Going down, they have to buy. If we're below it and coming toward it, and we're heading toward it from below, they have to sell against the direction of the move. But against the direction of the move is a double-edged sword. So let's go this way again. So we're going down, and they have to buy. Yay, they're buying. But wait, we're moving up. Oh, wait, so then they have to sell against the direction of the move. So it becomes a sticky, choppy kind of movement toward these sticky strikes. Same story from below. Again, we're pretending these aren't here yet. This is just a brief teaching moment. I like to teach. And if we're going from below, they have to sell. Oh my God, they're selling against the direction of the move. But wait, now we're going down. Oh, then they have to buy, pulling us back up. Now let's throw more shit in the game. That's a technical term. If let's just say this breaks, okay, and yes, this is sticky, it pulls us toward it, but market makers are short here, and so it accelerates in the direction of the move. So you have this pulling us down toward this area, 67, 66, 75, let's just say down 15, 20 points-ish, whatever. I mean, all the way down here, theoretically. But you have this pulling us back up. And so you have a big, fat Greek math dance. And you kind of just have to, well, you don't have to do anything. Intuitively, what tends to happen is you end up toward one of these larger areas you might not get here unless VIX starts spiking or whatever. And, so you get this sort of thing, and then you likely mean revert back up here. If vol expands, and this whole mess expands, and, and then you could go further. But even if that happens, you have a tendency to get a V bounce because remember, we go in the direction of the move. So we go down and then we stall out and start to go up. So now we're in the direction of the move again. Direction of the move back up versus this back down. You get kind of funky price action. We had that yesterday, kind of in a similar zone until we got to 6,700. Then we got stuck like Chuck. So now let's do the same exercise to the top side. So if we're over 60, if then, my daily plan is always written conditionally path dependent, if then. So if we're over this sticky zone, we could just kind of stay stuck like Chuck for a while. If we're over, I know I talk fast, so you have to listen fast. If we're over 66, 60, I think fast, so I talk fast. What's that a line from? For extra credit. Anybody who knows where that's from? Okay, time's up. Pulp Fiction. That's the wolf talking to them when he's cleaning up the bodies. Okay, so 6705. So if we get over here, we got this positive gamma pulling us up, negative gamma pulling us up at 10. We got this notch here at 20. Yesterday's high was around here. So, there's enough to support us kind of going up and hanging out. Yeah, great movie. One of the best. One of the best. One of the few I can keep rewatching. That one of my cousin Vinny. Um, And so we could easily kind of hit, plus this is yesterday's high area. So, there's reason to think that we could chop around here. If we can break out of the orbit of 6720, if the market decides it agrees with Chat GPT and inflation is coming down, then we have this nice ladder of positive, of negative gamma, so what does negative gamma mean? People are long calls. You probably can't see it. There's 1,300 long calls over here at 67.25. If we go up there, market makers have to buy to hedge out their exposure. It's not they want to manipulate the market. It's not anything. It's mechanical. That's why I like gamma. I'm not looking backwards at where the lines were yesterday, where the buyers showed up, although I do that. This is a prescription. They have to do it. They will do it. That's their job. That's their algo. That will happen. Assuming everything stays the same. Of course, people buy and sell, so it moves around, but these tend to stay the whole day. CBOE studies support that. These bigger ones that are here at night, they just tend to be here. Now, they could get overrun if there's 1,300 here and someone sells 2,000 of them. Well, then that changes the landscape somewhat. But we just can go with what the data we have, and this tends to kind of hold up throughout the day. Just saw the bar shift a little bit, so somebody bought or sold. This updates every 10 minutes. Okay, so if we get above 67.25, we have a path toward, what's this? 67.55. The JP Morgan short collar strike, somebody's echoing it and selling it today as well. Not surprising, not a bad trade. What's the JP Morgan collar? For those of you that are new to the game, JP Morgan, who you've heard of, has a big hedge fund that does collars for their investors. What's a collar? They sell an out of the money call to buy an out of the money, 5% out of the money, 20% out of the money, put debit spread, and they leave it. They don't trade it. They don't touch it. So if you're in that fund, you'll make about 3% a quarter ish, or lose no more than about 3-4% a quarter ish. On a good quarter, you might come out with 4-5% if the numbers work out. On a bad quarter, you might lose 6-7%. Probably not that much. It averages around 9-11% a year, and that's what they do. And they make a lot of money on commission of it. So that's a JP Morgan collar. There's the big ones are the quarterly coming up in December. That's 6,700. That's where we're going, I think. That's where we're going. We could overshoot, undershoot. I don't know how we get there, but I think we get there. And I'm saying it live on TV. And if I'm wrong, well, then, as my dad used to say, you can call me Pisher. This one for November is the smallest one. It's the baby bear. But still enough contracts to matter. It's still enough contracts to matter, and that's coming up on Friday. And that's just going to be adding stickiness to this every day throughout the week, and it still has to be hedged somewhat based on price movement. So that's just an added little piece of the puzzle. Now, let's get back to here. If we go down, right? We could go down. And we'll go back to the price chart in a minute. I'll turn the mic over to my partner in crime here. If we go below 6,700, remember we have this path down, and the chart people want this gap to be somewhat filled or want some resolution here. They don't like it. I don't blame it. I used to go to that school too, and I still go by this. I still have to look at it. You can't. The eye's been trained. My eye's been trained to look at that for years, decades. So I see it. I can't pretend I don't see it. It's like like in a courtroom, the jury will disregard that remark, but well, the jury heard that remark. I see it. I see what I see. Um, and so do most of us. Oh, really? Just watched Pulp Fiction last night. Wow. Well, my cousin Vinny. Or a double feature. That would be a great double feature, right? Throw in Natural Born Killers and that other one, the one where he goes to Mexico, the Tarantino flick where they go to Mexico. I think that's where your name comes from, isn't it? No, it comes from somewhere else. No, that comes from Trump. Um, anyway, I digress. So that's where we are. It's really not that complicated. Expected move when I looked before was around 40-ish. Probably gonna be 35. We'll look at the train in a minute. And so we're roughly here. Expected move is going to take us down, the 80 to 75, somewhere down here, right in the belly of the beast, where if you're long those, you're probably going to sell them and take the cash. That depends, do they roll them down or not? So maybe if it's a big debacle, we go down to 50, 55, round number-ish. I don't think so. We can go up. We could travel up this way. 30-ish up, here's yesterday's high toward the top of the expected move, somewhere right up in here, 30, 35. If we can get on our horse like we did yesterday. Yesterday, 6,700 was kind of the bridge too far strike. Was a big ass strike like this. It was the beginning of the day, if you remember, if you were watching, it was over here. Customers were long that. They dumped them on the move up. We saw it in the room. And then a big systematic fund came in, systematic, mechanical. They do it pretty much every day. They didn't sell puts, they got sold. Big call spread right up here yesterday, and we stuck right to it. We got to 80, 85 where we were supposed to get to, and then we mechanically drifted, and buyers came in around here, and we ended up here. So could that happen today at 50? Could we exceed the expected move yesterday? We went up a 4.5%. Could that happen today? Mechanically, yeah. Do I think it will? No, but it could. So I gotta tell you that. I wouldn't be doing what I do if I didn't tell you that. And it would be nice to see a chop zone consolidation day for once.
I think that's
Close,
likely.
close 10, 15 points lower, or at the high of the day yesterday, somewhere in here. I think we would all oh, another thing why that's important, a whole nother thing other than chart repair. Let's remember the systematic funds come in different flavors, and one of them is the volatility control funds and the risk parity funds. And basically what they do is they adjust their allocation. That's not that they trade volatility. They adjust how much E-mini they have. Let's just keep it simple, based on what volatility is doing, realized versus implied. Again, simple. So when realized volatility, when implied volatility is lower than realized volatility, when the market's acting crazy, they lighten up. They go from whatever it is, 92% exposure to 78% exposure. They're still exposed, but that's a lot of selling, and that adds to the whole mess. Similarly, on the flip side, so we need realized vol to be about 0.5%. normal day, 25 points close to close, 30 points, somewhere in there for a few days. We need the market to start acting normal, and normal will create buying. That's kind of the little caveat there, the little So normal creates buying. We also have corporate buybacks, and from what I've read, they have been in buying. Well, duh, if you're Meta, you're going to be buying down here. You have corporate buybacks. Max 7 pulled back. Max 7 are also the biggest buyers of all this buyback crap. That's going to also influence the S&P 500. So we have to factor that in. When do the buybacks peak out? Well, just so happens to be December OPEX, more or less the 17th or the 21st, whatever. So that's what's in the soup. And of course, we have seasonally thin volume this week. We have extra decay and mechanical forces with Thursday off and Friday a half a day. That should suck us toward that JP Morgan strike. Just the mechanics of it, unless we're too far away for it to matter. And I don't see that happening, but I mean, it could. And that's that. Okay. I promise I was going to shut up before, but I didn't, so I'm going to shut up now. And let me let Chewy talk so I can catch my
Leave some
breath.
for the rest of us, Doug.
Yeah, I know, right?
All right, guys. Good morning. I'll let you pull up the ES chart there.
There it is. And here, I actually used. Oh no, I thought I put the one in with your terminology, but instead I put in the one with my terminology. Oh well. Go ahead.
So right off the bat, I don't want to say expecting a chop day, but I would like to see one as well. I think it's in the cards. And the chop levels for me are going to be between 6,700 and 6,730. That's going to be kind of maybe even 35. Those are going to be kind of the edges for the chop area that I'm watching for.
Okay, so the yesterday's high 50 DMA whatever is kind of like the top of the chop area you're looking at.
That's right.
Okay.
And then if we can hold above 6730 into the morning, I think the next level to watch for is 745, and then after that, 765.
Okay.
I think today, as I was expecting it yesterday, I think today we're a little bit more likely to come down if we can break that 6705 level. I'm looking at 6680 and then 6670 is kind of a bottom for today.
So hold on. You're saying if we can't hold what, we're likely to go where?
If we can't hold 6705, we're likely to see 6680.
Okay, so 6705 is that 60, that's that 56, 80, 75-ish area that I was talking about. So if that doesn't hold, where I was kind of expecting where we should bounce if there's weakness, so there's confluence there, then down another, I'm going to say 20 points, because that's going to take us toward the 6650 round number area.
That's
Is
correct.
that, yeah, okay. So again, there's confluence, and we like to see that. And so, go ahead.
Go ahead. In
I'm
the
just going to
off
say the
chance,
combination of the methods of kind of standard price action, whatever other, TA, with the added gamma overlay that, Chewy and I do and that he uses in his room, just helps with, okay, so I'm expecting this based on what I've been doing, I being Chewy, been doing for years and been successful in making money at. But now I have the added edge of, well, I kind of know what to expect when we get there. Or so it just adds, I'm not saying for those of you listening out there in YouTube and Twitter land, I'm not saying you have to ditch what you've been doing for, years or how or months if you just joined, the trading world and abandon that and go full on gamma, although I've kind of done that, you can, you know, a lot of people just use it as an overlay. It's an edge, gamma edge. It's an edge. Gamma's going to give you an edge. Go ahead. I'm sorry.
No, no, that's pretty much just what I was gonna say. And if just I like to kind of give you that lottery in the off chance we do break 6680, I'd be targeting 6630 as kind of my
Whoa.
lot target. Yep.
Whoa.
All the way
Well,
down
that's
there.
6,600. I mean, yeah, that sounds crazy, but
I think yesterday winded us up for it a little bit, if I'm honest with you.
66, what number did you say? Like basically down here, which was a week ago.
Yep. 6630 on the ES.
Right. So that's basically this zone here. That was like Monday, Monday pre-market. That actually takes us back kind of more than a week, like Monday. So the Monday low was 66.50 on the ES. Can
Mhm.
we go with that? Can we compromise?
I think so. Yeah.
Okay. Okay, it's a deal. Okay, 66.80 is spot damage vol trigger. Right. And that kind of fits with what we're seeing. And why is it a vol trigger? Well, if you just do the mental math, quantuition wise, don't take out your Python spreadsheets, whatever that, I don't even know what Python is. I know I have a Python case I got in India when I was there in when was I in India? 1978. And a Cobra something and a Python something. But other than that, that's about all I know about Pythons. Um, So don't take out your Python script, but you can see you have the positive here, you have this clump of negative here, and it kind of like if we get below here, then this loses its pull. It's kind of too far away, and then we get into the orbit of this. And so, yeah, you could say it's a vol trigger. I don't like to think trigger like there's a magic line and like the world changes, you know. But yeah, uh, you know, again, I see things a tad
Yeah,
more
it's not a circuit
nuanced.
breaker or anything like that. So
Right, right, right. But I see things more nuanced. But yeah, that's a good number. That's a good number to pencil into your mind. I think that was kind of the bottom of my chop zone. So maybe he's been reading my notes. I don't know. Um, let's see. Dust to dawn. That's the one. That's the one. Yeah, that's the one. Yeah, that's the one. Okay, so that's kind of it. Let's just poke around here for a minute, and then now let's take a quick look at what's going on with VIX.
one thing that I do want
Right.
to say, guys, if we do get to 6670, I'd be watching for a little reversal there. Could be a nice long entry around 6670.
Right. So 66.50 is whatever. Yeah, that, and I would be looking for a V reversal around there too.
Hmm.
It could be violent. It
Yeah.
could be one of those. We like those. Okay. So let's take a look at what's going on in the VIX. Okay. So now, all right. So let's go back to SPX because that's where my brain is calibrated to like almost every like point. All right, so apparently, so Case-Shiller Housing Index. Oh, so now they have more crap. Okay, so you have dueling algos. So I don't know. It tells us what these numbers are from seasonally adjusted, whatever, but somebody doesn't like it. Economic reports this morning, not a huge impact. I mean, not a huge impact. I mean, I wouldn't say it's huge, but it's kind of seems to be defining the tone of the day. And so we'll see how this spills over. But Overnight low, we're not that far from it. ON low, overnight low. Um, Here's the low of my chop zone, which kind of truly was sort of talking about that area too. This is also, okay, so spot gamma's vol trigger is here. My bottom of chop zone is here. And then we go down here. So I'm calling this a bear trigger. I think Chewy was calling it, if we go here, we could then start revisiting lows from like a week ago, whatever. So similar idea. I still think that we stay within the chop zone.
I think the big defining factor today is going to be the amount of volume we see.
That's true too.
Um, and then going into Thanksgiving, I think volume is going to start to come down today. So if that holds true, I definitely think we create this chop zone and we stay in it.
Unless, as you were saying, I was just thinking, unless some clever algo has figured out, we've seen this before, not often, but we've seen it. Some clever algo figures out that if I buy 3,000 or 4,000 calls or puts over here, I can tilt the profile and make a lot of money.
Right.
We've seen it. And,
Yeah.
and so, and what better time to, go break into a house when everybody's out at the park,
That's right. Big if though.
Yeah, big if, yeah. Not, I wouldn't base my daily, my trading plan on that. Looking for that black swan or looking for that flying, for that thing. But you have to. I don't. You don't have to do anything. I like to just keep all these things floating around in the back of my mind and being mindfully aware in the moment of what might be happening, especially if I see something like WTF was that? Why'd that happen? Then I have my little mental checklist, additional considerations in the back of my mind. Well, could have been this, could have been that, whatever. Often it doesn't matter what it was, but okay, so something is going on that then I have to kind of look at, okay, so where are my zones? What's going on now? What's the likely path from here? Make sense? I think so. Makes sense to me. Okay, let me just do one thing. Hold on. I keep telling myself I didn't even get my Substack note out yet. Speaking of Substack note, I didn't put my special in here because I suck at this, at the admin. And also, like I said, in trying to simplify my process, I made my morning process at least a half hour to an hour longer. So I guess it's creative destruction until I figure out how to simplify it. I'm trying new things and it ends up taking longer, but that's just the way it is, right? Such is life. I'm going to take a quick peek at the option chain. And what you see here, this is just a little trade I put in yesterday, filled yesterday. Kind of my version of the IC whale trades. Did a little 5 wide and a 10 wide based on whatever my secret sauce for doing it. And if you're in the room, you saw it. And it's up 40%. Okay, if we'll take 40% overnight, close it out and call it a day, and then go to work if you have a job. That's not horrible either. Make $100 on a 5 wide. On how many do I have here? 3, 4 of them, whatever. Make you 40% on your buying power and call it a day. Close it out and go about your business. Nothing wrong with that either. Okay, so that said, let's take a look at the chain. And we have some people that do that. I don't know where she is right now. She's probably at work. Oh, shit. Thank you. Thank you. Take two. No, you just didn't have your glasses on. Here it is. Um, I'll have to look in the other account. It was It was yesterday. It probably is today too, but that's a good question. We'll take a look there too. It was doing very nicely yesterday. Okay, so yeah, what I was showing you, except I didn't screen share it, was I did these iron condors, 5 wide and 10 wide, a few of them yesterday. See yesterday's trades. Um, and what were they? Selling 66, 35, 30 on the bottom and 67, 65, 70 on top. Seems pretty good to me, huh? Those are way outside the expected move. Those are pretty much outside of all of our discussion today. And so, yeah. And I determined them and I put these in the chat and I talk about them when I do them. And this is for educational purposes only, not investment advice. And I have my buy to closes already in there. Going for about 55% and take the money and run. They can go kiss my butt. Okay. And really, I mean, for my style, I like to sell them wide. 55 cents, bro, that's good. Can I get away from the round number? Always like to get away from round number. 55 cents over here? Really? If I could get that, I'm going to take it. Now, I don't mind, wide margin and getting that. If one wanted to trade, a 5 wide or a 10 wide, let's just see what we got going on here. Let's look at your standard 10 wide, 45 cents. Not horrible. Somewhere down here away from the round numbers, away from the OI. Maybe I'll even put one in for science. And on top, see, now with this pullback, there's not a great one on top. Here I have a little fly thing, like a 1x4. This is like a Doc Frankenstein fly. Don't do this at home. But that's 55, the JP Morgan collar. We probably don't get through that today anyway. So 90 cents. Wow, that's juicy AF. So I'm already long this, but if I weren't, the 60, 80 for 65 cents, that's very nice. The 65, 85 for 50 cents, that's good. If we're back in that 5 wides camp again, I wouldn't want to go to 50. I just don't like the round numbers. I would look to get 55. And down here, put skew, you're going to get more for the put, so you can kind of go further away. You don't have to do both sides. Nobody's got a gun to your head and says you have to do both sides. Or you wait for the pop. Yesterday, I sold my puts in the morning on the drop, and I uncharacteristically for me, waited almost till 10 o'clock or whatever it was to sell my calls. Now, by the time I was selling my calls, my puts were closing. All that I was out of my puts within an hour. TIT, time and trade. And the calls kind of like took them a while to melt. I was out of them by like 1 o'clock or something, a little after. And then I went to mess with the goats. And yes, I really have goats. Okay, that's it. One last thing I wanted to look at. I don't trust the expected move on the chain when they show you that. So I have a few ways I get the expected move. Let's take a look. All right, 35. That sounds about right. Let's look at E-mini, 35. Let's do a last look at the chart. And I got to get my Substack note out before I get crucified. Christ, it ain't easy. The way things are going, they're going to crucify me. Extra credit, where's that from? So 35, and let's just say 67, 67.10. So that's 40, 35. So that makes it HOD stall on top, and 35 brings us down here on the bottom. Close enough. John Lennon, The Ballad of John and Yoko. But close enough. Partial credit. I think. I'm pretty sure it's about John Loco. Ask ChatGPT, and then we'll go. And so again, let's get back to SPX. Eating chocolate negative. There you go. The man, the something. Yeah. That's okay. So we're still sticking right here, 66.95. Don't get bears. Don't get all excited. I know you guys want to get a range day. I'm sorry. So 35 puts us at 65 bottom. I don't think we get there, but that's kind of a little bit beyond the vol trigger. And on top, it puts us to 35, EM high still hasn't changed. And so that's where we are. Okay, I'm going to go and see you. Now I got to get my note out. Take care, everybody. Trade safe and have a happy almost Thanksgiving.
Yeah, good luck, everybody.